Hello, everybody, and welcome to Market Thursday's Economic Updates with Max of Max Financial Services. This is episode 4 or 5, I believe. So thanks for joining us again. Hopefully you found it of value. Thanks for all the feedback. Thanks for all the comments. And it looks like it's going to be a good medium for us to explore in the future. So as always, we're going to cover major economic events, things that have been happening in the economy, things been happening at the company level, and most of all, what does it mean for you? So what we do is we typically go over the last week performance of the markets and kind of give you some of the key metrics that you should be aware of. So for the last week, so from last Friday through the end of market close today, the Dow is up 3.14%, closing at 17,755. Decent performance. Most of it really came the day before, yesterday, actually. The S&P is up a little bit less. It's only up 2.77%, closing at 2,089. So both of them are actually doing well. For anybody who's not familiar, or if you haven't opened your statements in a while, the market has really hit all-time highs in August. Then we had a major sell-off. We've kind of stabilized from that point. We've recovered a lot of the gains, so it's really going to be interesting to see where we're going to head from here. I definitely think that we're going to hit the highs. The question is really going to be, are we going to break through and hit more short-term highs, or is it really going to be bouncing off the ceiling and we're going to be headed lower? If we are headed lower, I think that's really going to be a beginning of a correction. So we'll keep following that, and let's go on. So crude oil closed at 45.75. That is for West Texas Intermediate. Brent crude was a couple of dollars higher for that. Oil is right around flat for the week, and really the emphasis is really going to be on the price is probably heading lower, so we'll take a look from there. The 10-year U.S. bond ended up at 2.17%. The yields went up. Why? Well, for that, we just basically need to take a look at what happened in the economy this week. A couple of days ago, the Federal Reserve met, and they decided to keep interest rates unchanged. However, they did make a couple of statements suggesting that there's a possibility that they will hike interest rates in December. As a result, basically, the markets took that hey, if the rates are going to go up, the 10-year rate did go up as well. So, I mean, it's still historically low, but we did go up about, I believe, about 12 basis points from last week. So that was one of the major events, with people basically thinking that they might start getting a rate hike in December. Personally, I don't believe so. I mean, we've been on the verge of a rate hike probably for the last year or so. I'm more in the camp that I think there's going to be more deflationary pressures. The numbers really don't look as good as they have in the past, and we're starting to see some breakdowns in the housing market. So September sales numbers came out, and they were okay, but they're definitely below expectations. And typically September is one of the higher months for the year, particularly when you're thinking about a lot of families want to close their house by September or earlier, so that their kids can start going to the newer school. So we'll take a look at what's going to happen at the October numbers. October, December, typically slower months of the year, and we're going to take a look. Thinking back to one of the more recent conferences I went to, there were a couple of markets that were starting to show signs of a breakdown, or at least very overpriced, and I believe those were Denver and some parts of the Dallas and Houston areas. As far as on the company front, basically the last week, if you've been watching the news, has been dominated by takeovers. So we've had the announcement of Pfizer taking over Allergen. Question is it for what reasons? And there are people who are suggesting that's for tax purposes. So kind of same thing that we had Burger King and one of the Canadian companies. It was a tax inversion. So we'll take a look at that. The other big one was actually Walgreens announcing that they wanted to purchase Rite Aid. Walgreens is the number 2 retail in the healthcare space. Rite Aid is number 3. There's decent amount of premium that people think is left in Rite Aid for the merger to go through. The question is, though, will the government actually allow it to happen for monopoly reasons? That's really going to be something to really take a look at. More and more people believe that it's not going to get approved, especially if we're taking a look at all of the holdups that we have in the office supply space between the merger of Staples and Office Depot. But keep in mind, though, Office Depot had already acquired Office Max, so that was number 2 and 3, and then you have now number 1 merging with number 2. Are we going to have the same thing in Walgreens? Possibly. I definitely do know that you can make the statement, well, Walgreens and Rite Aid and CVS were not really just selling drugs. I mean, if you go into a Walgreens or CVS, they're selling everything. It's almost kind of like a mini grocery store. So the argument can be made there, but we'll take a look. The other merger was actually was a rumor. There's nothing been officially announced yet, which was Hyatt looking to take over Starwood Resorts. That's going to be interesting. Starwood is actually, that would be reverse merger because Starwood is worth more than Hyatt. We're going to take a look at that. The other big piece of news coming over from Europe is Deutsche Bank just announced they're going to be cutting over 26,000 jobs, which is a significant amount of number. To put it in perspective, that's over 25% of our workforce that's going to be cut. As soon as I saw that yesterday at night, I was like, okay, there's something, I believe it might be the beginning of a bigger trend. I have not read the specific reports as to why, but having come from the financial space, having worked at UBS, and it almost feels a little 2070, 2007-y. So we'll keep an eye out on that, but the stock is down right around 8% today on the news. So that's on the bigger picture side. Earnings-wise, we had a couple of major earnings announcements last week. Well, this week, actually. Twitter announced for earnings. The stock is down 6.74%. It's for the week, and it was down primarily for reduced future forecast for their user base. They are growing it, but it's not really as high as people kind of expected it to be. But it is something to look forward to. Investors are definitely disappointed, and if you're taking a look at the stock over the 1-year number, it IPO'd, shot up to the moon, and came back to reality pretty much where it IPO'd. I mean, I've seen some calls for $22 Twitter price. We'll take a look. Personally, I actually think it might be attractive. So one of the things that Twitter did for this earnings call is they actually did it on Periscope, which is one of the companies that they purchased along with Vine. I think there's a significant amount of growth potential there, not necessarily just from the user base, but also from the monetization aspects of it, particularly as Twitter is expanding from a tool to an entire platform. Periscope right now is not monetized. Vine is not right now not monetized. There's significant money to be made there. Also, when you're thinking about it, everything is headed to video. I mean, heck, we took our email newsletters and now we're putting them on blabs, we're putting them on Periscope, and we're also putting them up on YouTube. Video is a lot easier to consume. Live streaming is here. Facebook is doing it. Periscope is doing it. Then you have Meerkat. You have a lot of other platforms that are going in that direction. So I believe that is going to lend a hand to Twitter down the road. But once again, though, it really kind of goes back to you got to separate between the company and the stock price. You might have a good company, but the shares might be significantly overvalued. And is it in this case? Who really knows? The other big one was actually GoPro. GoPro is down 15% today, and they were down 10% for the week. Again, they reported earnings yesterday. They were disappointing, to say the least. They missed, I believe, on the revenue numbers and the future forecast. And am I surprised? No, not at all. Particularly, I mean, as they IPO'd at a stupid high valuation. Stock more than doubled from there anyway. And then people started coming back to their senses. They had a couple of earnings releases they missed. And now people are really taking a more critical look at the company. Once again, though, and part of the problem there, I feel, is GoPro in particular. They're a hardware company who basically positioned themselves as a media company, and typically media companies are going to be, you're going to be willing to pay a higher multiple for the business than if it is a hardware company, particularly since anybody can come in and kind of replicate that camera. So GoPro it was a hardware company, but it was sold in the aspect that they're going to have a GoPro channel and people are going to upload their videos. But I think really, if you want to play the videos, Twitter might be a good way of doing it, and YouTube is going to be, YouTube through Google is going to be a significantly better way of playing it. Or even if you think there's going to be significant demand for storage, you're going to be looking at SanDisk, you're going to be looking at Western Digital and companies like that. So that's GoPro. I wouldn't touch it with a 10-foot pole. The other one, Starbucks. Starbucks just announced their numbers about 2 hours ago. And Starbucks, it was after hours is fairly flat. There were some concerns about the China numbers. So China. Once again, it's really going to be one of those excuses that's given by a lot of the companies. The good news is they did start using the Starbucks app. It looks like there's a pretty good take up there, and also there seems to be a pretty good take up on food. So people are buying food, and well, if you've eaten at Starbucks, it's significantly overpriced food, but we do it anyway with a smile on our face. So that's on the major earnings calls that we had over the week, particularly for the companies that we follow ourselves. Things to watch for next week. Tomorrow we're going to have some income numbers come out, so we're going to be taking a look at either if wages are going to be going up or down. Keep in mind that the Federal Reserve, their decision to hike interest rates is going to be based on two things. Number one, it's going to be based on unemployment numbers, and number two is going to be the growth in the economy. Part of the way you can tell the growth in the economy is by by income numbers. So we'll keep an eye out on that. On Monday, we have ISM manufacturing numbers, which is also one of the major reports of the week. And then Wednesday, November 4th, which I believe is still our election day, we're going to have some international trade numbers. So I know it's one of the popular topics right now. We're going to have some international trade numbers, primarily from if there's an imbalance. And then actually one other note on that, what we're going to be looking at is whether the United States, sorry, it's going to come to me. I'm sorry, whether our exports are being hurt by the stronger dollar. So typically, this is actually one of those topics that's discussed by politicians. So is a strong dollar good or not? Well, a strong dollar is good because it makes things cheaper for you. So for example, if you're an American and you're going to Europe, everything's significantly cheaper. But for an American company, so if you're selling Boeing airplanes, or if you're selling your pharmacy equipment, if you're any other high-tech industrials, if you're trying to export them overseas, well, now for somebody in Europe or somebody in a developing nation, it's significantly much more expensive. So for instance, Aeroflot just canceled a significant amount of Boeing and Airbus orders because their currency, in part, because their currency collapsed, and it went from 32 rubles per dollar to now over 65-ish rubles per dollar. So now basically those airplanes that you're planning on buying were twice as expensive. So strong dollar, it's good for you as the traveler going overseas, and it's good for the national pride. But it's significantly bad for you if you are an exporter. Now, the good news is for the United States, though, we do not really export that much. Mostly we still import. I believe when I was looking at the numbers, it was our exports were less than 25% of our GDP. However, for national pride, it's going to be one of the things that's going to be talked about during the election season. And we do kind of want to go back into there, and we do want to, what was it? If you want to balance the trade imbalance, exports is the way to do it. And particularly with services, professional services, yes, we're still the leader in that, but more and more emerging markets are kind of going in and we're competing for that same space. So that's on the trade numbers. Also, we're going to have the ADP employment report. So that's the private sector report that's going to be coming out. We're going to be taking a look at how many jobs were created. And then finally, on Thursday, we're going to have the jobless claims numbers. And hopefully that's going to give us a good look at what the unemployment rate is. So hopefully that was helpful. Thank you very much for joining. I think we have about 7 or 8 people watching us on Blab, and there's a significantly higher amount on Periscope. So thank you. At this point, we'll open it up for questions. But before we go, make sure you follow us on Twitter. Go to our website, www.maksfs.com, maksfs.com. We have click on the videos tab. You're going to be able to see all of the videos that we've done and we will be doing. We're also on YouTube, so you can take a look on there. And then finally, we've partnered with a couple of technology companies. You can go directly to our website. So if you have questions about how prepared you are for your retirement, there's a free retirement checkup app directly on our website. Once again, www.maksfs.com/retirement-checkup, and you'll be able to access the app from there. So thank you very much. I'm going to pause the recording at this point, and